Good evening, everybody. How are you doing?
Good evening, sir.
Good evening, Mr.
Welcome,
Olukunle.
sir.
Very
Good
fine,
evening.
sir. Welcome
Good
back
evening,
to
sir.
Very
us.
well, sir. We're still coming
How
back
are
from
you
work.
too?
Welcome
Good,
back.
Thank you.
good to hear your voice, sir.
My pleasure.
Welcome
Thank you
back.
very much.
You're
Thank you
welcome.
very
You're
much.
welcome.
Thank you very much. So, again, let me apologize for not holding the class for a while. I mean, it was due to reasons beyond my control. But that said, no problem. Let's move on. I'm sure we'll catch up. So let's cooperate together. I'll be giving a lot of assignments, so let's just try as possible to do our assignment as soon as possible. I believe I have treated capital allowances with you before, Abi. And in case it is not very clear, you can go back to the video, and perhaps if the video is not clear, I'm sure by the time I start doing company income tax, it becomes a little bit clearer, and not even a little bit clearer. It's going to be a lot more clearer. So to save our time, let's just start immediately. So I'm going to accommodate question just twice, right? So once it's time for question, I will circle around to see to get your feedback and then be able to start. But in the interim, can you confirm that you can see my screen anytime it comes up? Okay.
Yes, we can see your screen now.
So
I can see your screen.
good. Okay, makes sense. So now let's quickly do loss relief. Loss relief is a very small topic. So I will probably do loss relief, and at the same time I will introduce you to common income tax if time permits. That's computation of adjusted profit. That's the introductory part of the story there. So possibly that's what I'm going to be able to do before 9 p.m. But be it as it may, and also I promise that I'll be more regular in class, meaning that on Monday, by God's grace, I'll be teaching you, and beyond that, aside Monday, I will circle around to see if there are free periods that I can utilize. Right? So please, at any point in time, at short notice, I'll be calling for classes. Once I do, please don't be weary. I will make sure that we cover up, right. So that said, let's just get into loss relief now. In the event that company makes loss in a year of assessment, in the that the company makes loss, right, in the year of assessment, the company is still going to be paying tax, or better put, the company will be assessed with tax based on the provisions of minimum tax, right? So just that the company will not be assessed to tax as a percentage, typically 0.5% of revenue less franked investment income. That's pretty much what it is, right? So because of that, we now feel that by we now, I'm talking about tax authority. I'm talking about tax authority this time. So we now feel that in reality, right, you would realize that.
Submitted.
Can you hear me?
Yes, sir.
I can hear you.
Yes, yes,
Okay.
yeah.
So in
We can hear you.
reality, you would realize that in the event that the company makes loss, yep, we just treat it as usual. So what they have advised, or what is appropriate to do, is that because since you will assess a company to minimum tax when it makes loss, right? In the event that it make profit, let's try as much as possible to reduce the tax liability. And remember that the lower the taxable profit, the lower the tax liability, right? So because the lower the taxable profit or total profit, the lower the tax liability. So we now come up with a method of reducing the total profit, and that method is referred to as loss relief. Right. So to summarize all the stories I've been telling you this morning, I would say that loss relief is a relief granted to a taxpayer for making losses in the prior period. Right. So that is what loss relief is. So in the event that you make loss, such loss will be carried forward, right? So such loss will be carried forward, then that loss will be deducted from your future profit, such that your total profit will be reduced, and thereafter reducing your total tax liability. Do we get it to that extent? Do we get it to that extent?
Yes, sir.
Or makes sense. So if we get it to that extent,
No, sir. Please, can you come again?
only Jesus can do. So we are saying that loss release is the relief granted to a taxpayer for making losses in the prior period. So in that case, we are saying that if you make losses previous year, that loss should reduce your tax liability ultimately, and they will reduce that from your future profit. Does it make sense?
Yes, sir. It does, sir.
Is it clear, please?
Yes, sir.
Sorry, can you hear me?
Yes, sir.
Okay, so now let's look at types of loss relief. So there are typically two types of loss relief, right? We have current year loss relief. Current year loss relief is applicable to both, to only individual, not to both. This time is applicable to only individual, applicable to individuals only. And what is that? So we are saying that in the case of that loss relief, you are only permitted to, for individuals, losses made, right, can be relieved from other sources of income in the same year of assessment. So what we are saying in essence is this: if you have, say for instance, you teach, say for instance, you are earning salary, you are a partner in partnership, you have another side also one-man business that you are running, right? So if that is the case across board, right? So what will happen in essence is that what will happen in reality is that at the end of the day, if you make loss from the business, you can leave that loss from your salary. So ultimately, you are paying tax on your net income, right? So what we are saying is that you are paying tax on the net income in a year of assessment. So losses made in the line of business will be relieved from other line of business. However, it is not applicable to rental income because again, it doesn't make sense for any taxpayer to claim that he makes loss from rental income. Do you understand? Do you understand? By what magic would you say that in a year of assessment you made loss from the rent you received from your tenant? Or is it possible? Let me hear your thought. So since you're not willing to talk, let's go on. So it's applicable. It's not applicable on rental income. Now that said, right? In the year of
Sorry, sir.
assessment,
Hello.
if you yeah,
Okay, so sir, what if you said it's not possible to make loss from rental income? What if your cost of maintenance for that particular year is higher than your rental income? Would that not be a loss?
I have business.
You are envisaging that the next year will be better now.
Yeah, I don't know which area you're doing that kind of business, so but in reality, for us in Lagos, it's pretty much impossible for my landlord to make loss in a year of assessment from his rent. Because again, don't forget that capital items will not be considered. Capital items are not considered in computing your tax. So, say for instance, he bought borehole, is drilling a borehole. For instance, that drilling cost of borehole will not be taken off in a year of assessment. So maybe you are looking at it from the perspective of the capital items incurred. Capital items will not be considered in determining the net rental income. Does it make sense? Does it make sense?
Yes, I do. It makes sense. Thank you, sir.
Yeah. So now let's now look at, to enjoy this relief, you have to apply by writing within 12 months to the tax authority, right? You have to apply in writing to the tax authority. So let's look at carry forward loss relief. Carry forward loss relief applies to both individual and corporate taxpayers, right? So you do not need to apply in writing. What that simply means is that the loss you make this year will be carried forward to the subsequent year. And because obviously for taxpayer, corporate taxpayer, you are doing your filing, so the tax authority is aware that you made loss already. So in that case, that loss will not be relieved. I mean, that loss, you don't need to apply in writing. You don't need to write a letter to the tax authority to tell them they are making loss. So that's set. Let's look at the loss. I mean, the rules guiding loss relief, right? So we are saying first, the loss to be relieved should not exceed the actual loss made from the prior year. You always see this case in the case of commencement, but again, that has been scrapped out. So you would typically not see this case in my illustrations. But just to put it in perspective, the losses that you are recording the loss you are relieving, right, must not be more than the actual loss that you make in the previous year. The second one is that losses are not aggregated, right? Losses are not aggregated with accessible profit in the computation of companies' income tax. So what we are saying is that losses made from a line of business cannot be set off against profit from other source. What we are saying in essence is that if Dangote Sugar makes a loss and Dangote Salt makes profits, Dangote Sugar cannot relieve from Dangote Salt, right? Though they are owned by, though their ultimate beneficiary or the ultimate owners are what's the name? Are same persons, right? But again, business entity concept, business are different from the owner. So losses made from a line of business cannot be recouped from other line of business except for individuals under current year lot relief where they need to apply in writing. B, please give me water. So 3, losses incurred in 2 different year of assessment are being carried forward against future profit, but you relieve the one for the first year first before relieving the one for the second year. So losses will be relieved. Thank you. Losses will be relieved in that order. The one you make first will be relieved first, right? That's that. Number 4 is that if you make loss in the year of cessation, right, every loss made in the year of cessation is deemed lost. Unlike capital allowance, where losses made, where unutilized capital allowance can be carried backward, can be utilized backward, beginning from the penultimate year for 5 years. In the case of loss relief, any loss you make in the ultimate year, any unrelieved loss in the ultimate year is OT law, right? Meaning it has gone. Does it make sense?
No, sir.
Is it that it doesn't make sense? Do you understand what I'm saying? But it doesn't make sense in reality. Is that what you're saying? Or you don't understand what I'm saying? So
Don't
What
understand
you
what
mean
you're
by
saying.
don't worry, listen up, you understand. So what I'm saying is that losses made in the year of us in the ultimate year, right, cannot be relieved backward. You cannot take those losses backward, right? It is gone forever. Right. So that is also saying that there's no provision under the Nigerian tax system for carryback for terminal loss. And then finally, a claim for loss relief, you claim your loss relief before claiming capital allowance. So loss relief we gain priority over capital allowance. So right. So before we go into question, let me attend to before we solve practical questions. Let me attend to your question. So blessing, your hand is raised.
Good evening. Okay, so
Yeah,
please, I wanted to confirm, is there a time frame by which this loss relief will be claimed? So after which it will elapse? I just wanted to get
okay,
that.
loss. So with the Finance Act, losses are now carried forward indefinitely. So before it used to be 4 years, right? That was old rule, but now losses can be carried forward indefinitely.
Okay, thank you.
Welcome. Yeah. Stella. One more person after Stella, if we have any. So Stella, your hand is raised. And Joshua. So since Stella is not unmuted, Joshua, you can go ahead.
All right, thank you so much. Good evening to you. I want to ask that you mentioned minimum tax. So first question is minimum tax part of our curriculum for this diet? One. Then two is that you said if a company make loss, they will be charged on minimum tax. Then the loss they now make, they will not carry it forward to next year. So I want you to throw more light on that aspect, please.
Yeah, minimum tax is part of your curriculum. It's just if under CIT, I will treat that possibly on Monday. I'll get to that. So minimum tax is part of your curriculum to answer the first question. The second one is, so what happens in reality is that in the case where you make loss, right? In the case where you make loss, that year, the tax authority are of the opinion that since you make loss, we understand that you make loss, but if you're able to pay salary, you're able to pay people, right? That means you still have some money that we can still play with. So we will charge you 0.5%, not 5%, to 0.5% of your turnover, which is a little bit small, 0.5% of your turnover, less franked investment income in that year of assessment. So that is what you are going to be paying in place of common income tax at 30% or 20%, as the case may be. So that said, in the subsequent year, right, since you've paid tax in the previous year and you even made loss, so we have the opinion that we should reduce the profits this year by that loss so that the tax will be reduced in a way, given that the lower your profit, the lower the tax. Yes, yes. A percentage on turnover is the charge, is the minimum tax. Yes, that's correct. All right. So Joshua, have I answered your question?
Yes, thank you, sir. I'm just confused that is it the new rule now that said a percentage on the turnover? Because before we do 0.5 of net assets,
So
0.5 of gross
all
profit.
those things, 0.5 is higher of 0.5% of shared paid up capital, 0.5% of your total assets balance sheet. Then you compare it, then deduct it from 5% of 0.5% of turnover. All those kind of long thing, Abi. So it's the new law that now says that we understand that stress. Don't need for comparison. Let's just do 0.5% of your turnover, less franked investment income. Okay, good. Godwin.
Good evening, sir.
Yeah, good evening, Chief.
Okay, sir. So I just needed to confirm what I heard you said, that loss relief can not be carried backward, while capital allowance can be carried backward. You also
So
said,
let me
sorry?
answer that. Let me respond to that. Yes, losses in the ultimate year being the year you ceased operation, right? So if there are unrelieved loss in the ultimate year, those losses are deemed to be lost forever. But if there are unutilized capital allowance in the year of cessation, such unutilized capital allowance can be carried back for 5 years, beginning from the penultimate year. So if that's what you're referring to, yes, that's what I said.
Okay, thank you, sir. And then the last one, or they carried forward. Both of them can be carried forward indefinitely. Is
Yes,
that what you mean?
but you mean both of them? Do you mean both individual and corporate?
No, I mean loss relief and capital allowance.
Yeah, obviously, capital allowance can be carried forward indefinitely. Loss relief can be carried forward indefinitely.
Oh, okay, okay. Thank you. Just needed to confirm.
Yeah. Okay. So I think we are done with the questions, except for Stella, who has decided not to talk. I guess it's a network. But better still, you can put down your hands if your question is already answered. So that said, let me move on. So who wants to read for me? So that it will be a bit more engaging.
Okay. Jele Nigeria Limited has been sustaining losses for many years, but made a good.
Let me solve. Sorry, beg your pardon. Let me solve the second first before the first.
Okay. Dorime Nigeria Limited and agricultural company, which which was incorporated on February 1, 2012, commenced business on May 1, 2012. The company makes up its accounts to December 31st each year. The following additional information is provided. So we have adjusted profit or loss. He made 80,000 naira loss in the first year, 2016.
All figures
40,000.
correct.
So the capital allowance for each year of assessment has given under. Then the net turnover of the company was 101300. Then required compute the income tax payable for the relevant year of assessment.
So very simple, no thinking required, Abby. Please confirm that you can still hear me.
Very well.
Yes, I can hear you, sir.
Yes, we can hear you.
Okay.
We can hear you.
So the company commenced business in 2012, right? But you will notice that this company is not under commencement rule again, because the first 3 years of commencement has passed. And I remember I told you about normal basis period. The normal basis period is a 12-month basis period. Is that correct?
Yes, sir.
Yes, yes.
So by that, uh, we have 1 to 31, 12, 2016. All right. Trust me, we will cover. I'm very sure of that. So adjusted loss, Abby. How much is adjusted loss?
80,000.
80,000 loss. So you have unrelieved loss brought forward. How much is this? Sorry, carry down, beg your pardon. Because you didn't have it. You carried it. So it will be 80,000. Right? Are you doing?
Yes.
Only loss carry down 80,000. Then unutilized capital allowances. What do you have? 80,000, Abby? Sorry? Sorry, I think I lost my track of thought somewhere. Sorry. So
5,000.
you have teacher allowance for the year. How much is that? 5,000, Abby.
Yes.
Yes.
Then unutilized capital allowance. Carry down will be what? 5,000, Abby.
Yes.
I need to take
Yes.
right. So total profit obviously will be nil, Abby.
Yes.
Yes, yes,
Yeah, so your CIT obviously at 30% will be
Nil.
nil. Your TET at 2% will be what?
Nil too.
Oh, okay, good. So we now have 2018 YOA and the basis period is 1
27.
2017 to
31st of
31 December 2017, right? So you have adjusted profit this time, Abby.
Yes.
How much do we
40,000.
make as profit?
40,000.
40,000. Unrelieved loss brought forward is how much?
80,000.
So loss relief, you cannot take more than your profit, right? Because you cannot give what you don't have.
Not
Does
really
it make sense?
40,000.
yes,
Yes.
yes, yes. 40,000.
30,000. So right. So unrelieved
Unrelieved
loss
loss.
carried
40,000.
to 40,000. So here you have
Nil.
Nilabi.
Yes.
Yes.
So unutilized capital allowance brought forward was how much?
5,000.
5.
Say that again. 5,000, Abi.
Yes.
Yes.
Capital allowance for the
Yes, yes.
For the year,
Daily
3,005.
500.
right. So don't forget I've closed this up here. So this is a different line entirely. So how much is don't utilize capital allowance carry down?
8,000.
8,000,
5.
Abi.
8,500. Yes.
Yeah. Unutilized capital allowance carry down is 8,500, Abi.
Yes.
Then you have total profit. Nil, Abi.
New. Yes.
CIT at 30%.
New.
Nil. But TET at 2% is of accessible profit, right?
Yes.
So that means it is still at of that's 2% of 40,000. What do you have?
800.
800. So we have total tax liability.
$800.
Eight. All right, that's it. So let's go to 2019 year of assessment. All right, so that's 1
Oh,
28 to 31 December
That one 12,
20.
2018.
2018. Right?
20,000. Yes.
So you have
Adjusted.
adjusted profit. How much is adjusted profit? 20,000,
20,000.
Abi.
Yes.
Then let's sorry before that unutilized unrelieved loss brought forward was how much?
8,000.
40,000.
Okay.
40,000.
Yeah. Or
So loss relief now
okay.
with 20,000. That's 20,000.
1,000.
So you now have unrelieved loss brought forward,
Plus 20,000.
loss carried down. Figure me now. That'll be 20,000.
20,000.
So you have your nil here. Then that
Okay.
said, you now have
Yeah.
unutilized.
Sorry, sir. Please, I don't know how.
Yes.
Sorry.
Go ahead.
Like, I don't understand the 40 in the second year. Why the 40,000 was adjusted from the 40,000? I'm confused. I don't
So
really understand.
so now you have 80,000 here as the amount
Yes.
you can relieve. But in this second year, you had the profit of 40,000. So you are owing somebody 80,000, but you have only 40,000 that you can pay the person. So how much are you going to pay the person at the end of the day?
40.
40,000. Because you can't pay more than you have. Even with the fact that you owe more, but you cannot pay more than you have. So that's why we restricted it to only 40,000 that you have at this time. Then meaning that you are still owing the person 40,000, right? So the following year you have 20,000. Now
And then
that
the
you are owing
capital allowance is adjusted.
the capital allowance, how?
Like unutilized capital allowance brought forward.
Yeah. So the capital allowance brought forward for 2017, you had 5,000. Obviously, there was nothing that you could utilize it from. So meaning you will carry it forward. So that's what you have here as the 5,000 for the first year because you carried it down from the first year and brought it forward to the second year. But you now, I'll use the same example I cited. Capital allowance, take capital allowance to also be the amount you are owing. You are owing somebody 5,000 naira. Now you don't have money, but you need 3,500, and you go to meet B and say, okay, B, borrow me 3,500. So how much are you owing ultimately? 8,500. So that 8,500 will now be carried forward till when you have money. Do you understand?
Yes.
That's the logic around it. Does it make sense?
Yes, yes.
All right. So unutilized capital allowance brought forward. How much is it? That was 8,500, Abby. Is that correct?
Yes, sir.
Yes,
Yes,
8,000.
Capital allowance for the year is how much?
2,700.
Total no. Total, please. That's 11,000.
11,200.
So if that's the case, that's your unutilized capital allowance. Carry down. Total profit. You have nil. Set it at 30%. You have nil, Abby.
New.
Then TET at
Yes.
2% of accessible profit.
2% on
How much is
20,000.
that?
400.
400.
400.
So your total
400,
tax,
sir.
good. Total tax,
400.
400. All right. So let's move on to 2020 year of assessment. Basis period is 1/1/2019 to 31/12/2019. So you have adjusted profit. How much is adjusted profit?
50,000.
So this time we have 50,000. Then you have unrelieved brought forward. How much was it? 20,000, Abby? Loss
20.
relief.
Yes.
So now I'm owing you
20,000.
20,000, right? And I have 50,000. So I can conveniently pay up the whole of the 20,000, Abby?
30,000.
Do you understand?
Yes.
Then it will remain
30,000.
30,000. So I will say, yeah, nil, and here is 30,000, right? Then I have unutilized capital allowance brought forward. How much is it?
11,200.
500.
Capital allowance for the year,
3,500.
2,500.
3,000.
2,500. 25.
Okay, 2,000. Yeah, thank you. So what do you have there?
13,700.
13,700.
13, less capital allowance utilized. So there are restrictions to capital allowance, but the restrictions does not apply to agricultural companies. The restrictions does not apply to agricultural companies. So just let me ignore that and say, yeah,
Hello, sir.
yes.
That was the question I wanted. Very
I can hear
Hello, sir.
you. I don't know if somebody else can hear you.
Hello,
Your
sir.
background is a place. It appears as if you are on the road. So I can't hear you. There's a lady speaking. I don't know if the lady wants to ask a
Yes, sir.
question. Please.
I wanted to ask, how many years can you carry forward the unutilized capital allowance?
Capital allowance can be carried forward indefinitely. Although
Okay,
there are
thank
rules to
you.
it. There are rules to
Okay.
it anyway, but don't worry. By the time we get into company income tax, we'll explain everything in totality. But just take it as capital allowance in reality can be carried forward
Mr. Paul,
indefinitely.
sorry, sir. Mr. Paul, can you mute yourself? Ah,
Hello, sir. I have a question.
Okay, please go ahead.
Okay. Sorry, sir. I wanted clarity on restriction of capital
Sir,
allowance.
please, can you report
Please
to me,
mute
sir?
yourself. Oh.
Your mic.
So, and I was saying I needed
Okay, so please go ahead with your question. I think Justin was asking a question. Okay, Joshua. Oh, yeah,
Thank you.
Adebayo.
Thank you. So my question is that I'm confused about this third fund rate of 18.
Okay,
Today I see 3%. Tomorrow I see 2.5. Now I'm seeing 2. I'm tired.
2%.
Please just give me one rate now.
Although it's a topic I still want to treat, but since you've asked, let me just discuss it. So it was Finance Act 2020 that changed it to 2.5, right? Finance Act 2020 changed it to 2.5. So any date you have up to 2020 is 2.2%. So it was in 2021, it changed to 2.5%. So 2021, 2022, it was 2.5%. Then 2023, is now 3%. All right. I hope I've not missed up it, but that's what it is basically. All right. So,
Please, I
Jane,
have a question.
Jane.
Yeah, thank you, sir. So I wanted to please, sir, what do we do with the turnover that is in the question? I saw the turnover there. Is that what we use in calculating or knowing the
So,
percentage of
so the I okay, good. The examiner gave you that turnover just to tell you that it's a large company. You know, company that crosses that 100 million threshold is already a large company. So that is to inform us the
okay? All right, thank you,
to
sir.
apply
Yeah.
the meaning of that statement
Hello,
there.
sir.
So meaning that, yeah, good. So I think the next person I have is okay, Adebayo, you ready? Even the first person that
Yeah. Good evening,
yeah,
sir.
yeah,
Yeah.
good
Sorry,
evening.
please. Sorry for drawing you back. I just wanted to make a little bit clarification on the year of assessment that you use. According to the question, we're told that the business commenced 2012,
Yeah.
and the year of assessment was 2016,
Yes.
17. Sorry. So please, just I need
Yeah.
clarification that
So
particular day.
so how many years we are going to clarify together? So how many years did the commencement rule cover?
I
Remember,
don't
it's
have the
3 years.
question.
First 3 years.
The first 3 years, right?
3
That's where
years, yeah.
commencement. Yes, the first 3 years. So if you look at it logically, first year end in 2013, second year in 2014, third year in 2015. So meaning
15,
that
yeah.
beyond that, you don't have to apply commencement rule again. So that's why we just did it as a normal basis period. And normal basis period is a 12 months period. Does it make sense? So the examiner just put that commencement date here to actually confuse people. But as far as this question is concerned, there's no need to apply commencement rule because commencement rule only covers for 3 years, and this company has already escaped it. Have I answered the question?
Yes, sir. Thank you.
You're welcome. So, Justin.
Okay. Good evening, sir.
Yeah, good evening, sir.
Okay. I have two questions. Please, sir, can you project the solution? Okay. My first question is on capital allowance restriction. So I want to assume, let's say I want to test the restriction on capital allowance, this 13.7. Would I have done the 2/3% on 50,000 or on 30,000?
So the law says 2/3 of accessible profit, and the adjusted profit is same as accessible profit. So you would have tested it on the accessible profit.
Okay, thank you very much, sir. So my second question would be on the tertiary education fund, the rates. So you have explained that the rates depends on the year. Like you mentioned,
Yeah.
2021, 2022 should be 2.5% and 2023 should be 3%. But however, I want to ask which year should I be looking at? Now, I know we are using preceding year basis. That's for 2027, the basis period is 20. So which of the years, is it the basis period or the assessment year?
Assessment year.
Assessment year.
Yes.
Right. Thank you.
You're welcome.
Sorry, sir. Tertiary fund for tertiary 2023, is it 2.5 or 3%?
So it was in September 2023 that they changed it to 3%. So it is up until September. So that means it's from 24 year of assessment. If you look at it logically.
So that means from September 2023 downward,
Yeah.
upward, 3%.
Upward.
Yes, yes. Yeah. Oluchi. Okay, Shayo. I think I've answered everybody. So let's move on.
Sorry, Mr.
So total profit.
My hand, sorry, sir, my hand was raised. I just wanted to add something. So that's most of this
How
rate
much
is
is the
given.
total profit?
Can you hear me?
Yes,
Hello,
I
sir.
can
Good
hear you.
evening, sir.
Yes, good evening, Chayo.
Okay, yes, sir. So, I was raising my hand before, but I thought you did not want to call me.
I called you. You didn't answer me, so I felt you've moved on.
No, I haven't, sir. So I wanted to ask about the test TET rates. Like, I just need you to spell it out well because I think you were sort of fast, and I wanted to jot it down. And also, I also want to ask about the CIT. Like, is 30% like it's constant, right?
No. It's dependent. So I would advise that we wait till I do CIT anyway, because I will still have to repeat all of these things again. But just to bring it into perspective, CIT rate is not constant. It's dependent on the revenue. So companies below 25%, 25 million turnover, their CIT rate is 0%, meaning no CIT ultimately. So between 25 and 100, that's 20%, and above 100, it is 30%. That's what that simply means. Although the tax reform has actually adjusted that. So 50 million downward is now small companies. But don't let me bother you with that, because the act will not be examined in your exam in the first place. So let me bother you with those ones. So that is that about the company income tax. I think but again, don't worry if you miss it. I will still explain again when I'm treating company income tax. Potential education tax.
Okay, so
Uh,
sorry, sir. How do we know that this company is a large company?
if my memory serves me right, it was in 2020 that it was changed to 2.5. The revenue tells you. That's why I quoted revenue. So if a company has 100 million revenue, you know it's a large company automatically. If it has 5 million revenue, you know it's a medium size. If it's 10 million revenue, you know it's a small company. So the revenue informs you. All right. Yeah.
Hello, sir.
So now the
Good evening,
what
sir.
was I saying? The TET.
Hello,
So
sir.
hold on. I called you, didn't answer me. But let me answer. Hold on, Angel, Oluchi. Hold on. So for tertiary education tax, right? Just to run through it, I think if I'm researching right, it's 2020 that it changed to. I mean, 2021 it changed to 2.5%, and then beginning from 2024 or September 2023 it changed to 3%. So 2021 downward is 2%.
Sorry, am I the only one that cannot hear him?
I
I
cannot hear
can't
you,
as well.
but it's still here though.
So can you hear me?
We can now.
Yes.
We can hear you.
Yes,
We can hear you, sir. We can hear
Hello.
you.
we
We
can
can
hear
hear
you
you
now.
We
now.
can hear you.
I hear you, so.
Hello, can you hear me?
Yes, Mr.
Yes,
We
we
can
Bolu.
hear you.
can. We
Yes,
can hear
yes.
you.
Hello. So how much is total profits?
16.3.
26,300. Okay, good. Is it 16? Okay, 16.3. All right. So what do you have?
4890.
What do you have?
4,000
Say that
eight
again.
ninety.
4890. 4890.
So TET at 2% or accessible profit. What do you have? That's 2% of 5. 2 times 5 is 10. That's 1,000. Is that correct?
Yes, sir.
Yes,
That's
1,000.
1,000.
Yes.
So total tax is 5. Any question? So let me take the final round of question. That's I think I've answered Adibayo already. Yeah, so let me go on to Shayo. I think I've answered Shayo too. So Paul,
Okay.
okay, blessing.
Okay. Hello. I just wanted to ask. So on this percentage, yeah, because if we check
Yeah.
the question paper, you are given percentage for TET, for annual allowance, the initial allowance, all that. It's some what we should apply to our solution. I think so in exam condition.
So they give the rate, but they don't suggest the years of changes. So
Yeah.
they give the most current rate. We are only giving you
Yes.
for information because the
Yes.
examiner can be a woman. That's in the lighter note
Mhm.
anyway.
Okay. So, but we'll still have to consider the turnover and other parameters that might be applicable.
Yeah, correct.
Okay. Thank you.
All right. All right. So now I think I've answered all questions. I think I can go to the there's so again if you don't have any question, let me do this way. Let me give you the number one as class as your assignment. Will that work? So I will send this note to you, obviously. Do you want it that way? Or do you want me to solve it? But it's pretty much the same thing, it follows the same pattern.
Let's take it as assignment. It's
Let's
almost the
try
same
it
thing.
out. Let's
Yes,
try
sir.
it out
Time
first.
is for it.
Let me give you as a assignment.
Yeah, it's almost the same thing. Yeah.
Yeah.
Sir, can I say
I have
something?
the solution already anyway. So if you
Hello,
try
sir. I
it
have a
and you
question.
submit, yes.
Okay, please, can you explain more on this
You
restriction
can say
or
something.
capital allowance? Hello, sir. Hello. Can anyone hear me?
Yes, I can hear you, but I think he's
Yeah,
no
this.
longer here.
I guess his network. I guess his network. It's not that good. So maybe we just allow him to continue and see where he can stop because his network has been on and off. So that at least we can be able to get more from him.
Yeah, I can hear you.
Yeah.
I'm asking if you can explain a little about this restriction on capital allowance.
Hello, I can hear you.
Hello, sir.
Hello, can you hear me?
Yes, sir.
Yes, sir.
See, just type your question. Type your question. Please let him continue with
Just
us.
type
Type
your
your
question so
question.
that we can get more from him before he leaves. You can type your question. You pick it up from the chat box.
Yeah.
I'm not even able to hear you. That's the problem. Let me hotspot.
Please go ahead, sir.
Hello.
Hello, sir. We can hear you, sir.
Hello,
Okay.
we are
Yes,
hearing
sir.
you now.
Okay, makes sense. Sorry about that. Sorry about that. I had to switch network. So sorry, I had to switch network. You know, sometimes my stepmother can come, and once she comes, I have to also do two-factor authentication. So that those things that used to happen those days will not happen again. So it's two-factor. I have like three network I use now. If one wants to fumble, I will do another one. So that said, so we've agreed that you will solve that question as assignment. So I will send the note to you almost immediately, right? Almost immediately to avoid some issues. So let's quickly move into common income tax. I think that works.
Please, there's a question in the chat box from someone.
So what's the question? Let me quickly check. Unfortunately, it literally logged me out because of the network. So I'm not able to see.
I've
So
resent it.
okay, good. So you can apply to third restriction on all companies apart from agro-allied and manufacturing businesses. So if the company is not an agricultural business or a manufacturing business, then you are free to apply the third restriction. Does it make sense? So the idea there is that um, we believe that your capital allowances should not exceed your profit. So that way we still have some profits that you can pay tax on. So in that we will now say that your allowances, your total allowances for the year should be restricted to the total of profit so that at least the unutilized profits within that year, that's literally one third that you are not able to restrict, that you're not able to utilize that year will be carried forward. So what we are seeing in essence is, say for instance, the example we are solving, we solved the other time. Let me use that as an example. So say for instance, say for instance, this is 20,000 and you do two-third of 20, say this is 20,000, right? The accessible profit. And say two-third of 20,000 is say 5,000 naira. So meaning that I'm only using a hypothetical example. The numbers I'm calling are not correct. Please don't ask me where did I see 5,000, where did I see 20,000. They are not in this question. I'm only citing an example. So if you do 20,000 and say so it means that the balance you have will be 8,700. So the balance of 8,700 will be carried forward to the following year. That's what it means. So that way you are relieving only a portion of capital allowance. Does it make sense?
Yes, sir. Thank you, sir.
Please, where did you see 5,000?
No problem. I will tell you, I brought it from home. Okay, thank you. So I think we can continue now with common income tax, right? So good. So I'll just do some introduction to the topic and then we'll move on from there in the next class. By God's grace, by God's grace, all things being equal, our next class will be on Monday. It should be on Monday by 7 p.m., not 8, 7 p.m. In fact, if I'm able to get him before 7, I will inform you about how early it's going to look like. But again, it's going to be 7 p.m. Yeah, Temitayo.
Good evening, sir. Sorry, today is my first class, so I just want to ask how many classes have we got?
So you've missed many classes, right? Although we've not done much, we were waiting for you literally. So we've not done. I mean, when I say you, I mean people that will still join us at this time. So you can go to our YouTube channel, Ogudurolukunle on YouTube. So you see the videos of the previous classes. To cut the long story short, you missed basis period class one, class two, class three, then capital allowance class one and two, and then I think loss relief, which is the third class. So you've not missed much basically. Although on that YouTube page, I believe other diet lectures are there. So you can also watch the videos ahead of the class. I will always tell you topics ahead of the class. So at your leisure, you can just watch the video before the class so that at least you will get it faster once in the class. Have I answered your question a bit? I think so. Good.
Thank you, sir.
All right. Yeah. Where are we? So I'm just going to do introduction on company income tax. This company income tax, I am very sure that you will not miss it. Right? You will not miss it. It's impossible to miss it. What I'm saying in essence is this. There was this list I sent to you before at the beginning of the class, trying to give you some prediction, right? So CIT is one thing that you will like so much. You must love it. You must love it because it's likely going to be your number one. So your number one covers from basis period. Your likelihood of number one is from basis period down to pioneer status incentive. That's what your number one is. From the basis period down to PSI. That's what your basis period will always look like. Right? So that's what your number one will always look like, I mean to say. So company income tax, Ogunjo Olukunle is my name. So that's my YouTube. And that so meaning that, can you hear me?
Yes, we can.
Good.
I hear you now.
Meaning that you have to pay, meaning that you have good. Meaning that you have to pay attention. Please pay attention. That's what I'm saying. So now let's start from structure of businesses. That's the first thing we want to note. So typically I use a table to explain it to make it look a bit simple. And to be honest, this thing is simple. It's just hyping. The way hyping killed 2020. That's the way they've hyped this topic actually. So this topic is naturally simple. Do you understand? So now let's look at this. So I'll call this turnover. I will call this the nature and then call this the tax rate. So
Your screen is
company
not
with
on. Is
turnover
it
of
on?
less than 25 million. Is my screen on?
Is your network?
It's on. I think it's the
My
person's
own
network.
network?
Yes.
On the
Okay.
person's
It's
network, the
doing on and
person's.
off. It's going and coming.
Less than 25 million, right? So I would want to call this company a small company, right? And the tax rate is 0%, right? Then companies with greater than 25 million, but less than 300 million, you will see that is a mid-sized company. And for that reason, tax rate is 20%, right? And then the third one, you will say greater than 100 million, Then you say has a large company and the tax rate is 30%. That's the first thing we want to note. So now let me give you the format for computation of CIT. You ask me that why am I giving you formats? So the format will lead me somewhere. Company income tax. This is the format here. So you would typically have net profit, add disallowable expenses, less non-taxable income, then you have what is called, please confirm that you can still hear me.
Yes,
Adjusted
sir.
profit.
Yes. Yes.
Yes, sir.
Can you hear me?
Yes, sir, we can.
Yes.
Yes, sir.
Yes, we can.
We can't hear you again. Kindly come back.
I can't say anything. No. Person saying that you can hear.
Hello, can you hear me?
We can hear you now,
Yes,
sir.
Yes, sir.
Yes.
Yes,
We
sir,
can
we
hear you
can.
now, sir.
We can.
Okay. So I was saying less loss relief. So you have a figure, less capital allowances, restricted to 2/3 for accessible profit. So you have total profit. All right. So if this is the case, right, meaning that I have a big deal here. Are you with me?
Yes, please.
Good. I have a big deal here. The big deal here is I have to explain what is disallowed expenses and what is non-taxable income. Right. Alternatively, which I don't advise you to do except for exceptional cases, alternatively, you will always get the same answer anyway. But this other one is longer, is to say taxable income less allowable expenses. So that way you are going to have what is called adjusted profit, and what all of that you have under here will also come underneath, right? So
Sorry,
that is
sir.
pretty much it.
Restricted to one third of AP? Is it adjusted profit or accessible profit?
Accessible profit. Adjusted profit is the same as accessible profit. Adjusted profit is the same as accessible profit. All right. So that said, so in my next class, I will start with determining the what is allowable expenses, what is disallowable, what is non-taxable income, and what is taxable income. So that's where I'm going to be starting from in the next class. So let me accommodate a few more questions before we call it a night there. So I just want you to read up on those things if you can, or possibly just that's just the big idea there. So that said, so Ifama, you can go ahead with your question.
Sorry, I have asked the question that I want to ask.
Okay, no problem. So Adeyemi?
Okay, good evening, sir. Thanks for everything.
Yeah, good evening.
Please, can you
You're
please
welcome.
scroll back up a little bit? So I want to jot out the formula for the formats rather for SITA.
Don't worry. Don't worry. I will share the note with you. So it's pretty much not necessary. You're on the WhatsApp group.
Okay, yeah.
Yeah. So then let's use that to delay others. So
Sir,
Joshua.
I'm sorry for bringing this up, sir. I have a friend of mine that wants to join. I don't know how to get the link. I don't know. I've asked quite a few people. Nobody responded.
I will share with you. Just message me after this class. I'll share with you.
Thank you, sir.
Welcome. So let's go, Joshua.
My question is, I'm so sorry to drag you very backward, but it is what it is. I'm so sorry. I want to ask that loss relief, you said the whole rule, it can be recouped after it can be recouped only for 4 years. Then after 4 years, it's lapse. So I want to
Yes.
say, is it which year is that? Like, if they give us question below
20.
2019, are
No,
we
no, no,
using
no.
that old rule?
I don't. I don't think the examiner can ask you this question. I do not think the examiner can ask you that question anyway. But that was before Finance Act 2019. Do you get? That was before Finance Act 2019. All right. Shayo.
Yes. Sorry to bother you again. Sir, because of the new syllabus that's been reviewed, I want to know how many topics that they took out of tax and the new topics that they introduced and the new laws that they also introduced. Is it likely for them to set it like this diet?
So the new laws will not be tested, right? So the new laws will not be tested. That's one. Then the next one, there was this other question you asked me. Okay, what was introduced? The only topic introduced basically is accounting for leases. That's the only topic introduced into tax, basically. Nothing was expunged. Does it make sense? Nothing was expunged, but accounting for leases,
Sir.
tax for
Sir.
leases was introduced. Yeah.
Okay, sir.
So
Thank
they
you, sir.
even had no issue. They didn't take out of it. Sorry. So now, any other question before we call it a night here?
So someone asked a question in the chat box. I'll be chat. Yeah,
There's no question. There's no difference between accessible profit and adjusted profit. I said that. No difference. I understand where the issue is. Some of you have read books that told you that adjusted profit is before loss relief. Accessible profit is after loss relief. I'm saying that adjusted profit is the same as accessible profit because your tax is an accessible profit. So that's it.
Sir, Paraventure we use adjusted profit and accessible profit together in the same question. Maybe we write accessible profit and adjusted profit. Are they going to penalize someone for that?
No, 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 no. You are saying the same thing now. Just like saying a boy or him. Is
Okay.
there, you are referring to him at the end of the day, Abby?
Yeah.
Yeah, so that's it. So that's said, I think we can call it a night here. So see you again on Monday. If I have time on Saturday and you are free on Saturday, I can call up a class. Do you understand? But again, not later than Monday anyway. Not later than Monday, 7 p.m. Thank you very much for coming to tonight's class. I
Thank you.
appreciate.
Thank you very much, sir.
Thank
you
you
very
very
much.
much.
Thank you very
Thank you,
much.
sir.
So much,
You're
sir. God bless you.
Thank you,
Thank
sir.
you.
Thank you.
Yeah.
Thank you.